Today on the podcast, we're unpacking what's really going wrong in the housing market and how the right advice can help you avoid it.
We are back in your life, and today we are going to talk about, is property still a good investment? Michael, people have been pouring money into property. It keeps going down for some reason. Is it still a good idea?
Nah, pack it up and go home.
And we'll catch you next time.
Yeah, look, some people are giving up on property, but I think it's short-term reactions to a long-term asset, right? And I'm under no illusion. Things are tough out there at the moment. Yields aren't what they used to be. Interest rates are higher. Things are looking a bit frosty for property, but it's a long-term asset. We know how it performs over time. We're not looking for these giant 10% returns per year or something like that.
Well, that's inspirational, Michael, but let me hit you with a bunch of bloody depressing statistics. In May 2025, house prices dropped 0.9% year on year, and sales volumes are down 23% compared to 2021.
Great if you're a buyer.
Over 34,000 homes are now listed.
Even better if you're a buyer.
That's double the volume seen during the boom.
That's twice as good.
22,000 mortgages were past due in early 2025.
Distressed assets. If you're buying, that's a good thing. Mortgagee sales.
Up 12% year on year. By 2048, it's projected that 40% of retirees will be renting, challenging the idea that property ensures financial security. Average house prices remain at 6 times household incomes, pushing more buyers to rely on the bank of mum and dad. Public sentiment is turning, with more people questioning whether homes will even hold their value long term. So on that point, Mike, do you still feel she'll be right?
Yeah, I feel she'll be right. I think that at the moment, the sentiment is a little cold on property. And some of the things that have made property a really good asset up until now may not be there in the future, like the lack of capital gains tax, right? However, we know the long-term averages, so we know what that looks like. We also know that even if a capital gains tax comes in, which it will at some point, all that's going to do is bring it onto par with some of the other asset classes. You will still have the ability to use leverage to get a stronger return out of your investments.
I think the other area a lot of people who are in trouble went wrong was they had FOMO, or they really didn't think about what might happen. Like, say, for example, if you talk to a mortgage broker, they're going to stress test you on 7 to 9%, opposed to some people, if they're just looking and be like, well, interest rates are 2%, I'll be able to make those repayments, life will be fine. Mortgage brokers helping you structure your loans to have like a buffer, making sure you've got a revolving credit or an emergency fund or something set aside, because, you know, the amount of people who've been restructured out of their roles, been made redundant, you have to have those buffers set aside. Long-term retirement strategies, including debt-free timelines. Like, are we downsizing a home? When are we going to clear off our mortgage? Not paying minimums. And then the other bit, Mike, is there are more options available as well. Like, KiwiSaver is becoming a bigger and bigger part of people's first home deposits. There's shared equity options, low deposit schemes, family guarantees. There's different ways to do these things now, isn't there?
Yeah, I also think that people are just a little bit smarter about buying houses than they were, say, in 2019, 2018. Like, people have seen a really short, sharp, boom and bust. So a lot of the first home buyers that we're talking to that are coming into the market don't want to overstretch themselves. They're literally like, I don't need, a $1.2 million house. I can get away with a 900, 950 house and it's totally fine, right? They just don't want to push it to the nth degree, because for them, yep, it's still an investment. It's still something that should appreciate in value, but it's not the be all and end all that it used to be.
There's some really valid points, Mike. And I think there's a lot more to talk to about staying optimistic, thinking about the future when it comes to being a property investor. And we'll talk about those after this break.
Buying your first home in this economy can be tricky to navigate, but you don't have to do it alone. Get in touch with the mortgage brokers at Lighthouse Mortgages for expert advice on how to purchase and how to structure your mortgage. Click the link in the show notes below to get in touch now. Back to the episode.
So, Mike, we've talked about all the reasons why people are anti-property now, going like, maybe it's not going to last anymore. Maybe we should get out of it. But tell me, why is property still a good idea?
Leverage. It's as simple as that. Usually we say leverage in the tax advantages because there's no capital gains tax. But like I said before, even when capital gains taxes are introduced, that leverage piece is still going to make it a better asset class than somewhere you don't get any leverage.
Yeah. So leverage is great, Mike, but the asset still has to go up in value. So like I hear a lot of people like kind of be like, well, yes, property went up 6.5% over the long term, but that's not going to be reality going forward.
We've heard all this before, right? We've heard this with the GFC. We've heard it with the dot-com bubble. Like, that is just sentiment in the market, right? And if you go back long, and past performance is not an indicator of future performance, but if you go back long enough, you just look at the long-term trend, you apply leverage to that, and you go, reasonably speaking, I think it's going to be all right. And people are still going to need houses to live in. People are still going to need houses to rent, to buy. Like, there will still be a market going on where people are buying and selling and transacting these. You throw in inflation and some reasonable asset growth, and you're going to be laughing.
Yeah, that's right. And maybe it won't be 6.5. Maybe it'll be more like 5%.
Say I'm wrong, and let's say the long-term average now drops to like 5. That's still a really good performing asset when you throw in the leverage on top of that, right? And for everyone saying, oh, but I can get leverage on my Forex account. Yeah, but you're very unlikely to get stopped out, on if you leverage and buy a house like you are on your Forex account.
Yeah. And the question is, okay, well, why is it still going to go up 5% a year? Well, property is just inflationary, right? So every year when somebody gets a pay rise, because apparently they come from time to time, you have a little bit more money that you can pay towards a house. Your lending goes a little bit further, right? So over time, if you extrapolate over that over a decade, people have more money to spend on a house.
You're totally right, James. But again, this is all just sentiment, and it's how people are thinking now. These are long-term assets. You can't make long-term decisions on short-term sentiment, right?
Yeah. And so the other thing I would say is, say we go from end of 2021 till now, right? Just under 3 years. You would never tell somebody to go buy a house for 3 years.
No.
When yes, you are paying real dollars to top up these properties. That hurts. But we know people should be holding property for 10 years. And if you bought a house at the end of 2021 and you hold till 2031, it's going to work out.
Yeah. I think that, when people are saying, oh, housing isn't just going to grow and it's 6% per year. Yeah, I don't disagree that people need to be probably a little bit smarter about the houses they're buying, about the type of property, whether it is a multi-commercial, whether they're, doing something to the house, renovating it to increase the value. I think if you're a little bit smarter about your property strategy, I still think it's a really good asset class.
I hear apartments are a great investment, Michael.
I would rather headbutt a nail, James.
Yeah.
Now, look, no apartments.
So just for that, on the apartment point, I probably had 3 or 4 clients who bought an apartment 10 years ago. They're selling it now, and it's worth the same as what they bought it for. So just... unless something particularly special, generally speaking, stay away from apartments. Yeah,
I had a buddy of mine who him and his girlfriend bought an apartment over 10 years ago, maybe. And they split up a while ago, but he went to buy it off her now. And he was like, oh man, it's going to go up. It was going to have increased in value so much. Literally exactly the same.
Yeah.
It's like, well, there you go, man. Yeah.
Yeah. Then the downside is if you're buying something that hasn't gone up in value, you don't get half the capital gains.
Yeah, exactly.
Yeah. The downsides of divorces. Mike, so we've talked about why property is a good long-term asset.
Yeah.
Let's touch a little bit on why property is a good opportunity right now.
Property is a great asset now if you're a first-home buyer, right? Like if you are looking to get into the market now, I would say, has it ever been a better time in the last 15 years than right now to be a first-home buyer? Maybe not. Everything is trading at a discount. Interest rates have come down off their highs. So great time to get in as a first-home buyer. The flip, it kind of applies the same to investors at the moment. You probably just need to be able to hold out for a little bit longer. If you're getting in now, don't be relying on 10% capital gains or 2% interest rates. That ain't happening. But again, everything's trading at a discount compared to what it was, with the exception of a couple of hotspots. But most of the time across the country, it's still a buyer's market. You get a pretty good deal.
Yeah, the cost of money is cheaper.
Yeah.
House prices haven't moved yet, and there's heaps of houses to choose from. You and I would been negotiating on something, and we would negotiate a week apart.
Yeah.
Because we know there's nobody else to talk to.
Yeah.
So we would make an offer and they'd be like, nah, or they come back with something that was ridiculous, and I just talk to them for a week.
Yeah.
In a hot market, you're frantic, right?
Yeah. You can't wait to get the offer back quick enough. So
Sorry, the other big piece as well for the first home buyers is when a market's really hot, you're having to do all your due diligence beforehand, go to auctions, which are stressful. You can negotiate on the price and do all of your due diligence after you've agreed to the price, which can save you a lot of money in terms of building reports, legal fees. It's a huge advantage.
Yeah, at the worst, it's over $2,000 just to do the DD if you're including a registered valuation in there, right? And if you lose 3 or 4 auctions in a row, that is not a great time. If you're looking at things by negotiation, if you can't agree on the price, you don't have to do the DD. And you go get your pre-approval first, you know how much you can spend. And then you're basically out there, you can make offers on properties. Like that is a dream for a first time buyer. I think one of the other things to look at as well though is, if we're looking at the how to get into a property or kind of pathway to purchasing, a 5% deposit loan, they're still in the market. You don't need a 20% deposit. You can do a 10 or you can even do a 5%. So again, like that is a healthy way of going about it if you don't have the bank of mum and dad to lean on.
Yeah, like I've heard from some clients who have the bank of mum and dad that helps them out. The key is just skipping avocado on toast. Don't go out for coffee every day and just be daddy's special little boy.
Get that deposit money. Yeah.
Alrighty, we'll wrap it up right there. So the main thing I would say is like, when it comes to property, yes, we've gone through a tough period, but you've just got to think about this over the long term. There are great opportunities out there. We'll wrap it up there. Much love to Lighthouse for sponsoring this episode. Please subscribe to the channel, give us a review, give us a like, and we'll catch you next time.
Cheers.